Very good morning, everyone. Good morning, all of you. I hope you all are doing good. So just let me know audio video is clear. All good? All right. So welcome back again in the editorial analysis. Since yesterday the editorial class didn't happen because, as you know, we have a holiday on Tuesday. Okay. So, but you need not worry. I have gone through all the newspapers of yesterday as well as today. Okay. And then selected the editorial. So today you don't have any economy or finance related article which is relevant for you as such. Okay. Because in today's newspapers, these are flooded with your election results, election based opinion, views, result based opinion and views, all these things. All right. So in today's newspapers, you don't have any relevant article. So the one which I have picked up, this one is from your business line of yesterday. Okay. So nothing is missed upon. We have covered yesterday's as well as today's newspapers. So this is from your business line of yesterday, which is 4th June, because today you don't have any relevant articles, all election and result related news. All right. Now see, as you can see here, the topic here is retailization of corporate bonds, a win-win. Okay. So question mark is there. Is it a win-win? This I found useful for you to understand that how SEBI's decision can impact the entire growth trajectory of India. Okay. So let's try to understand this. What is the editorial talking about and all these things, right? So basically retailization of corporate bonds. Why this editorial has been titled as retailization? So you can read this article from business line 4th June. Okay. This is the screenshot. You can see this is the article. Now let's try to understand what is the editorial is talking about. So what is it? Okay. First, what is the pretext? What is the situation? So the thing is that for retail investors, the door to debt investments is opening wider. So the author says that recently the several measures taken by say SEBI, RBI and all these initiatives are leading to new doors being opening up for your debt investments for retail investors. Now you need to understand these two terminologies. They are very frequently in the news. First is what is retail investors, who is a retail investor, and then what is debt investment. So who is a retail investor? Who do not require institutions to do the investment, right? So they are different from your institutional investors, right? Who are retail investors? Anyone? We have discussed this number of times. Just give me a second. All right. So who are retail investors? Let me know quickly. Anyone? Anyone? Any individual? Yeah, individual basically, not institutions, right? Common people, yes. Retail investors are basically your non-institutional investors. Okay, generally people invest via institutions like mutual funds, insurance companies, banks, etc. But when you invest directly, this is retail investment when you do not require any intermediary, right? Small time individuals, right? Okay. So this is it. You have understood who are retail investors. Now what is debt investment? What is debt investment? Investment in your debt raising instruments. Okay. What is debt investment? Investment in your debt raising instruments. What are debt raising instruments? Which are issued by such institutes or government for the purpose of basically raising loan or raising debt from the market. Isn't it? Examples are bonds. Yes or no? Bond is a debt raising instrument. That's why we call bond as a, yes, corporate bonds, government bonds, right? They are debt raising instruments. So when you invest in these kind of securities, we call them debt investment. You have invested in a debt instrument, right? So this is the thing. Now, so the author says for retail investors, door to debt investment is opening wider. Why is it opening wider? Let's see. With the Securities and Exchange Board of India, SEBI reducing face value of corporate bonds by 90%. So recently SEBI has reduced the face value of your corporate bonds by 90%, and the value comes out say to rupees 10,000. Okay. So this reduction by 90% is what is the news, and then the entire analysis goes on. So let's try to understand that these kind of decisions by SEBI will impact the Indian bond market, security market and the entire economy in what manner. Okay, so it will be interesting. Let's see how does it happen. Yes, okay, so reduction in the face value. Face value is the price of the bond. As you all know, what is face value? Face value is the price written over the bond, which is fixed. Okay, price and the coupon, which is the interest. Okay, these are two fixed things, right? In case of bond, unlike your shares and stocks, the price and the interest keeps on changing in stock market, but this is not the case with bond market. Okay, so now the author says that this is salutary. Author says this is salutary. Why is this salutary? Because an additional investment avenue is being created. It has created an additional investment avenue, additional investment option. How and why? Let's see. In a country, this is acknowledged so much because there are certain reasons behind it. Okay, what are the reasons? So the author is saying this is welcome step. This is opening a new option for investment in a country where more than one third of the household savings is allocated to relatively lower yielding banks' fixed deposits. Are you getting my point? Okay, so the author is trying to make a contrast between huge household savings getting towards or getting diverted towards fixed deposits which are earning lesser yields as compared to these instruments. So author relates this decision of cutting down the face value by 90% to the investments related decision to be taken by households with regard to FD or debt instruments. Are you getting this point? So the author is highlighting a problem here. What is the problem? That the major chunk of India's household savings. Now, as you all know, what is the importance of household savings in an economy? Isn't it? You need to have more savings in order to have more investments, more economic activities, because your household savings when deposited into the banking system gives banks more of NDTL. More of NDTL. What is NDTL? What is NDTL? Just a basic understanding of NDTL. Net demand and time liabilities. What is NDTL? Net demand and time liabilities. Net demand and time liabilities. Yes, net demand and time liabilities. But what are these? What are net demand and time liabilities? So basically, net demand and time liabilities are your entire deposits. First of all, these are liabilities, and you all know that for banks, public deposit is a liability and loan given by the bank is an asset, right? Yes, so it is the entire depositor's money. And why is it called net demand and time liabilities? Because broadly the accounts which you classify having with the banking system are either demand deposits or time deposits, right? Demand deposits are those deposits which can be withdrawn on demand, so they don't have a lock-in period as such. Current account, saving account, right? And what about the fixed deposits? The term deposits, your fixed deposits, which have a lock-in period, okay? So they are less liquid. So all these deposits together constitute your NDTL, net demand and time liabilities. Now out of these funds only bank gives you loan, right? So household saving increases your NDTL in the banking system. NDTL increases, credit creation by bank increases. When there is more credit creation, more money being supplied into the market for investments, more economic activities will happen. That would lead to economic growth, right? So this is the importance of savings. Now when savings are going towards fixed deposit, as you can see, the author is highlighting the fact that these fixed deposits are earning lesser interest rates. The investor, the households are getting lesser yields on them, but still they are investing more on these kinds of instruments or deposits, okay? Despite having lesser yields, more than 1/3 of the household savings going to fixed deposit. That can be channelized to these markets. That can be diverted back to these bond market. Are you getting my point? So this is the point here. Now the picture will get more clearer as we do the analysis further. This is the first thing, okay? Then the author says that today, and at present about 47 lakh crores of corporate bonds are outstanding. What are outstanding bonds? Which have not reached their maturity value, right? So they are in the market. So the author is highlighting the fact that as of now 47 lakh crore of corporate bonds are outstanding, which means there is this much market lying there, isn't it? 47 lakh crores, this much market is there which you can capitalize upon, right? Originating from 4,200 issuers. So this originates from these much of issuers. This data is not important for you, but what is important is, but retail investors' share is less than 3%. In purchasing these corporate bonds, the share of retail investors is just less than 3%, which is very less. Now, I want to tell you all, these analyses are more important now because you have a new initiative by RBI, which is your retail direct scheme. Critical analysis of that scheme can be asked in your examination or in your interview. You can be asked that why this scheme has been launched recently. What can it contribute? Yes, retail direct scheme. How can it contribute to your development? So you need to understand the big picture happening around. That's why you can say that these kind of initiatives have taken place right now, given the pretext, all these things happening, right? You can relate these analysis with such schemes directly. So that would create a wholesome and more better answer for you. You will be able to answer the questions asked from the interview panel to you, okay? So this is the thing, try to understand that author is highlighting retail investor share is just less than 3% in this 47 lakh crore of corporate bonds which are outstanding, which is a lesser share, okay? That compared, now this 3% compared to 21% from mutual fund and insurance companies, insurers. Are you getting this point? So this is less when you compare the investments done by mutual funds. So these are institutional investments, isn't it? And insurance companies. So their share is 21%, 26% respectively, but the retail investors' share is 3%. So there is certain problem which is to be addressed, and this news, the reduction in the face value, can address this situation. That's why this analysis is very interesting. Yes, retail direct scheme we have, the mobile app we have. I have told you all these three initiatives, right? So let me know, have you understood this picture, what is happening? that the retail investment is lesser as compared to institutional investment, very less, isn't it? So then try to understand what is further going on. Now the author is saying that from a returns perspective, the 5-year AAA rated corporate bond was yielding 7.68% in this May 2024 as compared to only 6.7% on a similar tenure fixed deposit on average. Now try to understand that for the similar time period, FD on an average, the fixed deposit was giving you 6.7% of interest. Okay, 6.7. And the author is saying that AAA rated corporate bonds. What are AAA rated corporate bonds? You know that before being issued, and the bonds which are issued in the market, they are rated by the credit agencies, okay, credit rating agencies like your S&P, Standards and Poor's, okay, then your Fitch, then Moody's. All these are your credit rating agencies. So AAA is the best rating which you can have. AAA is your best rating which you can have. So these corporate bonds given AAA rating by S&P 5-year bonds are giving you say yield of 7.6% as compared to the fixed deposit, but still people are investing, their household saving are diverted toward this. What is the problem? See, we have discussed in earlier analysis as well. Problem is people do not understand the bond market. There is less of financial literacy in terms of bond market. They are more familiar and comfortable with these instruments, these deposits like FD, mutual fund, all these things. Are you getting this point? So we need to correct this situation out, right? So this is first thing. Then from a small investor's perspective, the author says that spells opportunity missed. So if we talk about this situation from a small investor's point of view or perspective, isn't it an opportunity which has been missed? Yes or no? Tell me. If you could have earned 7.6%, 7.68 to be very particular, as compared to 6.7, isn't it an opportunity which is missed? Yes or no? Yes, right? So you understand that. That's why these decisions of SEBI can correct all these glitches which are there. Okay. Since we are talking about opportunity, so this word reminds me of a famous quote. I don't remember who said that, but the quote goes on like this, that opportunity has a sly habit of slipping in from the back door. Remember, I just recall this quote, so that's why I want to share with you that opportunity has a sly habit of slipping in from the back door. Do you understand this? Just wanted to share with you. This is a good quote which I remember, and this means that opportunity generally comes from the back door. It doesn't comes in front of you as it is. Are you getting this? Slipping in from the back door, and that too in indirect form, which is to say, I just want to convey to you all, opportunities are generally hidden. You have to recognize them, okay, and capitalize upon them. Otherwise, you will miss upon huge opportunities in your life to build your career, right? So this is just something extra which I wanted to share. Isn't the risk is comparatively higher than FD in copy? Yes, risk is higher, of course. So there is this is one factor, okay. This is one factor. All right, risk is higher. But let's try to understand what the author is trying to emphasize upon, okay. So the author is saying that this is an opportunity missed by the small investors, okay. the regulatory thrust, this decision of SEBI at this time is very timely for this, okay, on retailization of debt, therefore is timely. So this is the thing author highlights, that these kind of decisions by SEBI and the initiatives like retail, yes, you have deposit insurance and all those things. We are not going into that debate, okay. These deposits are far more safer than your securities, bond, financial market. But we have something different to discuss here. Alright, just try to understand that you know, the author is saying that these kind of initiatives by SEBI, and then you have the retail direct scheme and the mobile app recently launched by your RBI, are very timely. So they are not late. They conform to the situations going on at the contemporary level, okay, at the present level. So they are very timely. They can correct these situations. They can redirect the flow of household savings from, say, banking to the bond market. That will be helpful for the government, for the corporations as well, because for them it is a debt raising tool. They can easily raise debt that will boost up their performances, both of the corporations and the government. Are you getting this point? Okay, so now let's move ahead. Apart from the reduction in face value, which is the news, apart from the reduction in this face value, recent efforts include, what all are the other recent efforts? What all are the recent efforts? Your retail direct platform, as you all know, which was there 2021, launched in 2021, but recently in news because retail direct mobile app has been launched by RBI, which supports both your Android and iOS, right? So by RBI of India for your government securities and state development loans. So this mobile app for government securities and state development loans, apart from this reduction in face value, is contributing to the entire scenario, okay. So as you all know that this is a scheme, a platform where retail investors can directly indulge in trading or buying and selling of government securities without requirement of any intermediary. Just need to open an account, gilt account with your RBI, as you all know by now, right? Okay, but what are these state development loans? You all know what is government security. What are state development loans? You need to understand them. So the retail direct platform is for both the government securities and the state development loan. Yes, securities includes your bonds as well. What are state development loans? State development loans are basically your securities or bonds issued by state government. So they are not called state bonds, they are rather called as state development loans. Are you getting this point? State development loans. Yes. So these are bonds launched by your state governments. They can also be traded on this platform, right? So state bonds, state government's bonds. So you need to understand government securities, central government, state development loans by state governments. Clear? Okay. Bonds issued by your state government. This initiative plus many more initiatives which have been launched in the series, like adoption of single schedule of disclosures. So all your disclosure processes of the securities having single schedule, at same time you should disclose the issuances, okay, to the public. So the single schedule of disclosure will reduce cost, will reduce time, will make public easy to understand all these issuances and disclosures in the financial market, okay. To fast track the public issuances, that would increase the pace of public issuances of these securities. Then with reduced time reduces, as I told you, cost reduces, right? Reduces cost and reduces effort. So basically disclosure at the same time with the same schedule helps in reducing cost, time and synchronizing your issuances for the public, isn't it? right? So have you understood this, that all these are working together, they are not working in isolation, and in this pretext such a decision is adding more to the prospects of retail investments coming more into the financial market. So that's why the heading retailization of the government bonds. This can directly be asked in some of your exams. What do you understand by this retailization? Do you think that presently the market regulators are focusing upon retailization of the bond market or the security market? So then your answer should be based upon all these analysis, that yes, retail direct mobile app is there, such kind of decisions by SEBI are there, which gave us hint that yes, we are moving towards more retailization as compared to the conventional method of institutional investment, isn't it? Right? So this is the thing. Now let's move ahead. Have you understood till this point? Just let me know so that I can proceed further. You have understood till this point? Yes? All right. Now, moreover, the author is emphasizing that there are two conditions given, two things happening in background, which then makes these kind of decisions more useful. The reduction in the face value, the retail direct mobile app, all these things. What are these two situations which are making these decisions more helpful and more useful? Let's see. So the first is, so author says this is more useful given the pretext. What is the pretext? First, that CRISIL as you all know is the credit rating agency, right? CRISIL estimates or has estimated corporates will have to raise 100 to 120 lakh crore via corporate bond market or bonds by fiscal 2030. Do you understand this? What does this sentence mean? So CRISIL has estimated that the corporations will have to raise from 100 to 120 lakh crore of funds through corporate bonds by the financial year 2030. What does this signify? This signifies that this much will be your outstanding bonds. So market is going to expand, yes or no? This much will be your outstanding bonds in the market. Issuances will increase. Yes, when you have to raise debt, you will issue more bonds, isn't it? So when corporates are expected to issue more bonds, corporate bonds to raise funds, that shows that more bonds will be available, okay? And at the same time, trying to attract more retail investors will make sure that retail investment is becoming more integral with the Indian bond market. Have you understood this? Right? So this is the first pretext, that CRISIL expects that the outstanding corporate bonds will increase by 2030, as it is estimated that corporations are going to raise 100 to 120 lakh crores of funds via bond market, via corporate bonds particularly, right? So this reduction helps that people will be able to buy more bonds, isn't it? Giving reduction in the prices, more retail investors will be able to buy the bonds and will be able to be an integral part of this market. Have you understood this? Right? Second pretext, second thing which author highlights here is RBI's household saving data, recently released household saving data. As you are able to see these data in your RBI annual report classes also, which we are taking, right? Suggests, so this data on household financial savings suggests that financial assets tantamount to over 10% of India's GDP. Household savings, particularly household saving in financial assets, are equivalent to 10% of your GDP? Isn't it a huge percentage to affect the entire GDP? Yes or no? Right? So if your household saving are say around 10% of your GDP, that means household saving are affecting your growth. They have a substantial impact on your growth. So if these savings are channelized through retail direct investment platform or any other platform, right, and they are brought back to bond market, that will lead to an increase in retail investments in the bond market. Isn't it? Have you understood these two things? That given these things, such a step is more welcomed, right? Given these two pretexts, such a step is more salutary and more welcome step, right? Okay. Now, given the size and significance of these two markets, this and this, measures to retailize the corporate bond market could prove transformational. Given these things happening and at the same time SEBI cutting out the face value can prove transformational. One can see retail investors rising, which is below 3% right now, rising to say more percentage level, right? That can be a huge transformation apart from your conventional trajectory which is going on. Okay. Further, the author gives you a hint of global scenario related to this. What is happening at the international level? We have talked much about the domestic level, but then we need to understand the global level as well. So what is the global scenario with regard to this? Author says that typically retail investors are less aware of corporate bonds than bank deposits. So this is not an issue with India only. You need to understand this. This is not an issue with India only, rather it is happening at the global level. At the global level, retail investors are less aware of corporate bonds and bond market when compared to bank deposits, life insurances, postal savings like your recurring deposit given by post office, right, attracts a lot of households to save more in fixed amount. Okay, so for postal savings you have RD, which is right now very prevalent, recurring deposits, life insurance companies offering very lucrative offers, right? Then you have bank deposits like FDI. So this is a global trend. Then the author says that retail participation globally is in the range of 1 to 6%. Global level, retail participation is deviating between these 2 points, okay, say 1 to 6%. So if India is having 3% participation, that is not very disappointing, but at least we need to improve our situation irrespective of the global trend. We have our own economic structure, problems, advantages which we can capitalize upon, right? So this is the range within which at the global level retail investment is ranging, right? Nearly 2/3 of the investors surveyed, among all the investors which were surveyed, okay, for this purpose, 2/3 of them cite awareness related challenges. This is important, which you should remember. This thing is a challenge of bond market which you can write in your answers as well, finance related questions or answers. What is the issue? Awareness related challenge. So 2/3 of the investors surveyed cite this as the problem, awareness related challenge. Okay, what is the product? Okay, what will be the execution? How much they will be able to earn out of it? All these questions they find very difficult to find answers to, right, when it comes to investment in bond. So this is a problem highlighted at the global level, not only at the Indian level or domestic level. Are you able to understand this? Right? So these are the challenges and the things which are happening, highlighted by the author. Highlighted by the author. Clear? Now, what is the way ahead? What is the way ahead? So let me sum up all these points for you, then we'll be dealing with the solutions. What we have read is SEBI reducing the face value of corporate bonds is a welcome step, and an entire editorial written over it. Why? Because Indian markets are witnessing this trend that despite these bonds giving you more yields, you are investing, households are investing in, say, fixed deposits, postal deposits, insurance policies, etc. First thing, that needs to be corrected. We want to integrate more retail investors with the bond market and the securities market, isn't it? Second thing, given the recent initiatives by RBI, the retail direct scheme, by SEBI, okay, then other disclosure related issues and schemes, initiatives which we have discussed, single structured disclosure, right, single scheduled disclosures. So you don't have, people don't have to find these things at different times, okay. So disclosure with a single schedule for all companies. All these things, given global challenges, that at the global level as well, people are finding it more difficult to be aware of these kind of products and markets as compared to the bank or as compared to the product line offered by the banks. Why have I used this particular word product line? Because I want you to understand what is product line, okay. Tell me, what is a product line? When I say product line offered by a bank or a financial institute. Yes, bond market falls under your capital market only, because bonds are generally for longer period, okay, for more than 1 year, and all those instruments which are there for more than 1 year fall into your capital market, while all those instruments which are there for less than 1 year come into your money market. Clear? Tell me, what is a product line? When I say that people are more investing in the product line offered by the banks, what is a product line? So product line is basically all these services offered by your banks and financial institutes. Got it? What is a product line? Whenever you hear or read this word product line means services issued by your banks or financial institutes, right? So recently, as you know, now we have universal banking. Earlier banks were primarily indulging in lending activities, okay, but now you know banks are there, indulge in financial market, doing investments, right, selling securities, buying securities, basically selling and buying is done by your RBI, okay. So these things happening has widened the product line of the banks and financial institutes. That's why we say this is universal banking. More products are being offered, more services are being offered by your banks and financial institutes. So now you have understood what is a product line, right? So given all these scenarios, we are trying to retailize the bond market, and the solution now are these mentioned here, okay, given by the author. For Indian investors to take advantage and for the policy makers to encourage retailization, a few more steps are essential. Now these steps are highlighted by the author that these can be, contributing towards more retailization, okay. What are these steps? First, improving awareness. As you all know that we have recently seen that out of the investors which were surveyed, they cited awareness as a major challenge for them, right? So improving awareness regarding these kind of products and markets, right? concerted efforts through SEBI's investor education program, which you all know, okay, regarding financial literacy, and other financial market organization initiatives on financial literacy are vital. So initiatives by organizations, by SEBI or other financial organizations which are aimed to improve financial literacy would be a welcome step, and that will address these challenges lying there. First thing, okay. Second, liquidity. A mechanism or institution would be necessary to provide liquidity to underlying bonds. You have to provide certain liquidity to the bonds or bond market, okay, so that people are not very afraid of the rise and fall in the prices, because that leads to rise and fall in the rise in the bond yield. As you know that bond yield are inversely related to prices, or bond prices are inversely related to bond yields, right? So having enough liquidity in that market will at least boost up their confidence in the bond market. Are you getting this point? Intermediaries can also be incentivized to promote market making. So market making, bond market has to be expanded first, then you can attract more retail investors. For that you can also incentivize the intermediaries which are there, like the brokers in the secondary bond market, which act as intermediary between the issuer and the buyer, seller and the buyer of the bonds, right? Yes, finfluencers, yes, they can also contribute. One thing mentioned here is tax incentive. Another solution is tax incentive can also be there, okay. So remember, another thing here as highlighted by the author is tax incentive, and then he gave the example of 2011 infrastructure bonds, which are a long-term bonds. So particularly giving example to 2011 infrastructure bond is very deliberate. Why? Because these bonds 2011 issued in 2011-12 infrastructure bonds gave tax advantages. So people invested in them with a long-term maturity period, right? So what are tax advantages? Say, given some sections of the Income Tax Act, you can reduce your tax liability. So they give you tax deductions. If you earn something out of these bonds, that will give you tax deduction. So you can reduce your entire tax liability by investing. That would be a win-win situation for you. So the author says that these kind of tax incentives can also be there if you want to retailize more the bond market. Are you able to understand this? Right? So these are the solutions highlighted by the editorial. Now connecting all the dots, so retailization is happening, this is for sure. So this event is something which you should be very aware about, because you are appearing in these examinations. They can ask you at any level about this retailization happening. So now you all know what is happening in the market, right? What are the pretexts? What are the steps taken? What are the challenges at the domestic level and the global level? As we have seen, similar challenge, lack of awareness, not ready to invest due to lesser understanding about the product and the yields to be reaped out of the market. And then the solutions like this, tax incentives, more awareness, more liquidity. So this is what exactly is going on, and that's why I picked up this article, will help you in your answer writing and all these things. Right? Otherwise, in today's newspaper, as I told you, every newspaper was flooded with your election result analysis, opinions, result related things. So this was from your yesterday's business line, and nothing more was very relevant for you with regard to finance and economy editorial. Any doubts as of now from this analysis? Anyone? I hope you have understood all these things, right? It was interesting, somewhat different from the usual analysis, but is helpful, right? Not understood or no doubts? Since I asked both the questions at the same time, so I need to filter it out. Not understood or no doubt? No doubt. Okay, very good. What about all of you? If you could please add the flow of editorial in the end, so that we can grasp the concept how we can write a good answer. Like first editor talk about the topic, then initiative. Yeah, so that's how I proceed, isn't it? Don't you agree? That's how I structure my lecture. Talking about the news, then doing the analysis given by the author, then I connect all those dots, explaining simultaneously concepts to you, and then finally I ask you whether you have understood or not, right? All right. So that is it for today, and thank you so much. Thank you so much for staying tuned and keep on revising these things. I'll see you in the next session tomorrow. Have a great day. Yes. All right. Thank you so much. Have a great day.